Hi, this is Derek Chamberlain with MoneyAhoy.com, and today we're going to talk about a little bit more about LLCs. We're going to talk about how you can pay yourself from a single member LLC or a multi-member LLC. So hopefully this is a good problem to have. You've made some money and you're ready to get the money out and pay yourself some sort of salary or just get the money into your own personal bank account. So there's two different things to remember. It really depends on how your LLC is set up tax-wise. By default, your LLC is set up as a partnership for tax purposes. And what that means is that all the money that comes into the LLC counts really in whatever member percentages you have set up. So if it's a single member LLC, it's 100% yours. If it's a multi-member LLC, it's all in whoever has what amount of membership percentage. But that's treated as personal income. So it comes straight onto your tax form as personal income, and you pay taxes against that, both personal taxes and self-employment taxes. The other way is if you elected with your LLC to be treated as an S corporation. And if you don't know what that means or you haven't heard of it, you don't necessarily need to worry about it yet. And where the difference comes in is how you pay yourself from a partnership form of taxation versus an S Corp. For the S Corp, it's almost more like a corporation in that you can pay yourself a salary, and then anything left over beyond that, you can pay yourself in the form of dividends. And I won't get into a lot of the details between the two in this video. It's a little advanced, and you generally don't have to worry about switching over to S Corp taxation unless you're making a lot of money in your LLC. You know, $20,000, $30,000, $40,000 a year or more, it starts to become pretty advantageous to switch over to S Corp. If you're below, I'll just kind of make up a number, $10,000 to $15,000, it might not be worth your time to try and switch over to an S Corp because it's a little more complicated in the way you handle things. So for the rest of this video, I'm going to assume that you're a single member or multi-member LLC and set up as a partnership. So all you need to do is basically just cut yourself a check. There's a little bit more to it than that, but it basically boils down to that. For an LLC that's set up to be taxed as a partnership, that's all you got to do. Now there's a couple things to remember. The partnership counts as personal income, so you want to pay yourself whenever you feel like it. But you want to make sure you do a couple things. And the first thing is you want to record that in your accounting records that you've made a withdrawal or a membership distribution to yourself. So that should be pretty straightforward. The next thing is you don't want to take all the money out of the LLC. You want to leave some in to make sure the LLC is fully capitalized. And the reason that's important is one of the previous videos I made. If you take all the money out, you could get sued, or a creditor could come after you and say, well, he's not operating this as an LLC, this is just him personally because he's taking all the money out and he's not leaving enough money to run the company, so he's really just funding this from his own pocket. This is really just him acting as a business and not the LLC acting as a business. So you want to make sure you leave enough cash in the business to operate for several months so that you could say that you're not undercapitalizing your business. Okay, and the best way to really pay yourself is, like as I mentioned before, just through a check or a ACH deposit. Okay, and I know I said I wouldn't talk about this, but I'm going to touch on it a little bit. If you did elect to be taxed as an S Corp, you really just pay yourself a reasonable and customary salary, and you're kind of free to decide what that means exactly. The IRS doesn't have hard and fast guidelines on that. If you have questions, it's best to talk to an attorney, or you can Google it to get a little better idea, but the main idea is you can't just pay yourself $10 a month if you're running a huge business and then pay yourself the rest in dividends. That's cheating. Likewise, you can't pay yourself millions of dollars of salary or your wife millions of dollars of salary if all she's doing for her job is washing the dishes or something like that. So you got to make sure it kind of passes the straight face test. And you would record that as just a normal salary in your accounting records. And then above and beyond that, if there's any money left over, you can elect to pay the members dividends with the money left over. And you're still a business, is still going to pay corporate tax on that, but then anything left over that comes to you would count normally as long-term capital gains, and you would pay most likely a 15% tax rate on that. It's a good way to get around the self-employment tax penalty that you pay for owning your own business if you get paid as a partnership. But really, it doesn't become advantageous till you're making more than $10,000, $15,000, $20,000 for all the extra work that's entailed there. So again, how to pay yourself in a single member LLC is very simple. Cut yourself a check and just make sure you leave a little bit left over in the business account so that you're not undercapitalizing your business. It's just as simple as that. Now, if you have any questions or comments, please go ahead and leave those in the section below. This is Derek Chamberlain with MoneyAhoy.com. I hope you found this video on how to pay yourself as an LLC helpful. Let me know one way or the other if you liked it or if you didn't. Of course, if you liked it, please give it a thumbs up. And I'd encourage you to subscribe and let me know what other videos you guys would like to see, and I'll be sure to crank those out for you. This is Derek Chamberlain with MoneyAhoy.com. Take care.